This is why you still haven't developed a profitable scalping system using trading indicators. Most important rule in trading is that indicators should deliver different type of information about the price and confirm each other rather than duplicate signals. I'm fixing your problem today by showing a great combination of indicators designed for scalping, a system using the RSI, the ADX, and the 50 exponential moving average. And if you want to show your support, please drop a like to help us with the YouTube algorithm and turn on the bell so you don't miss when new videos are released. The scalping strategy combines three indicators, all displaying different information. Whether prices are about to increase or decrease, the angle they each offer is different. By incorporating these three indicators, we will analyze the market from different angles. There are four general types of indicators, offering information regarding trend, volume, momentum, and volatility. We will use one of each category, excepting volume information. So, one momentum oscillator, one trend indicator, and one volatility indicator. First, we'll add the RSI as a momentum indicator. Price will often trend upwards or downwards for long periods of time, and it's useful to know the strength of a particular trend, which is why the RSI as a momentum indicator is very helpful. You will find that the RSI oscillates from overbought to oversold as the price rises and falls. Remember, oversold and overbought signals don't instantly present a change in price direction. Although it's not 100% reliable, this RSI signal generally indicates that the trend is starting to run out of momentum. Then you add the ADX as a volatility indicator. There will be times when the price is extremely volatile and moving upwards and downwards, and there will be quieter times when the price is barely moving at all and is stuck in a narrow trading range. Sometimes this is obvious, but it's useful to use the ADX because it will give you a good indication of the volatility at any given moment. Now, volatility is just one important factor that can help you to contextualize price action in any given market. Understanding the momentum using the RSI and the volatility using the ADX can help you to anticipate price behaviors that might otherwise surprise you. And finally, we'll add a trend indicator, the 50 exponential moving average. If a market is in a strong uptrend, the price will stay above the EMA, and if the market is in a strong downtrend, the EMA will be above price. So RSI for momentum, ADX for trend strength and volatility, and the 50 EMA for trend direction. In this scalping setup, RSI will show the movement of price. The 50 EMA filters the price fluctuations, meaning the noise, to see the real picture of the market direction, and the RSI displays possible shifts in momentum. When we're adding the ADX into this equation, our goal is to watch the direction of the market movement when there is a sharp increase in volatility. When it comes to analyzing and measuring volatility, the ADX analyzes the recent price movements. A high ADX reading implies that the trend is strong, and a low ADX shows a weak trend. Used in combination with a 50 EMA, you can filter those trades when there isn't much activity in the market. The combination between the RSI as a momentum indicator and ADX as a volatility indicator is also important because you can confirm when the market is turning and choose a great entry point. Now let's talk about the most important aspect of combining these indicators, the settings and the lookback periods of each indicator. For the RSI, we'll change from the standard 14 period to a 3 period. Some of you may be familiar with the Connors RSI using a 2-period RSI. Connors, the author of the strategy, said you should look for buying opportunities when the 2-period RSI moves below 10, which is considered deeply oversold, and for short selling opportunities when the 2-period RSI moves above 90. This is a rather aggressive short-term strategy, and from my backtesting, this wasn't a very successful system. I never managed to get a win rate over 50% in any of my previous attempts. Try it yourself, and you'll probably record the same results as I. But this system had some potential, so I've changed the RSI lookback period to 3. I've changed not only the RSI parameters, but also played around with the overbought and oversold readings, and found out that by using an 80 RSI reading for overbought and 20 RSI reading for oversold condition, I get more accurate signals. We'll pay attention when the RSI of 3 period touches the 20 and 80 level. It doesn't need to go deeper into oversold or overbought. As long as the RSI touches the lines, we'll have the first condition in our strategy, the momentum condition. The volatility condition of the strategy is given by the ADX. The average directional index is used to determine if the price is trending or not. The ADX gives you a reading that generally ranges between 0 and 50. The higher the reading, the stronger the trend. The lower the reading, the weaker the trend. The ADX is very useful as a confirmation tool when you want to trade in a trending market, but will not give you reliable buy or sell signals on its own. That's why the combination with the RSI and the EMA. The standard setting is 14 periods, but I've modified it to be in line with our scalping strategy, so I've changed the ADX parameters from 14 to 5. And while many traders use 25 as the key level for the ADX, I prefer the 30 level. The noise is greatly reduced. An ADX reading of over 30 identifies a strong trend, whereas a reading of below 25 identifies a weak trend and will avoid signals in this area. Obviously, the higher the score, the stronger the trend. A reading between 30 and 50 signals an extremely strong trend, while a reading over 50 signals that the trend is very strong and it could reverse. So ADX of 5 periods, with 30 as the most important level. The 50 EMA, the trend condition, is used to generate signals with simple price crossovers. When price action tends to stay above the 50 EMA, it signals that the price is in a general uptrend. If price action stays below the 50 EMA, then it indicates that it is in a downtrend. This trend filter is very important for our scalping setup. Please note these two important tips. The further price can pull away from a moving average, the stronger the current trend is. And the longer the price can stay on one side of the moving average without touching the moving average, the stronger the trend. Here are the conditions for a buy setup. The trend condition: price is trading above the 50 EMA, and ideally, the average is sloping upwards. The momentum condition: the 3-period RSI pulls back to oversold conditions and touches or goes below the 20 level. And the volatility condition: ADX must be above 30 when the signal occurs. When we have all conditions, we enter at the high of the first green candle, the candle which pulls the RSI from the oversold conditions. The conditions for a sell setup are: the trend condition: price is trading below the 50 EMA, and ideally the average is sloping downwards. The momentum condition: the 3-period RSI goes to overbought conditions and touches or goes above the 80 level. And the volatility condition: the ADX must be above 30 when the signal occurs. We enter at the low of the first red candle, the candle which pulls the RSI from the overbought conditions. Here's an example on the 5-minute time frame. By the way, this is the time frame I use and brought me the best results. First, we identify the trend using the 50 EMA. We see the trend is up as the price is above its moving average and the EMA is sloping upwards. Then, after we identify the trend, we look at the RSI to identify buying opportunities within the trend. When the RSI touches the 20 level, we prepare for a change in momentum from the downside to the upside, in line with the dominant trend direction indicated by the moving average. And third, the volatility confirmation from the ADX. As the ADX has a reading higher than 30, then the signal is valid. Also, look where the signal appeared, right at the previous swing low, which made it a double bottom around the 50 EMA. A little bit of price action confirmation is always welcomed. We enter at the high of the green candle that took the RSI out of the oversold zone. Stop loss goes below this green candle, so a very narrow stop loss. Aim for a 1-to-1 or a 1.5-to-1 risk-reward ratio. In this chart we found a short signal. Price was trading well below the 50 exponential moving average, and the EMA was sloping downwards. The 3-period RSI pulled back and rose above the 80 level, so we expect a momentum shift to the downside. The ADX stayed above the 30 level, indicating that the trend was strong, so we had a volatility confirmation. We entered short at the low of the red candle that took the RSI out of the overbought zone. Stop loss above this red candle. This was a successful 2-to-1 risk-reward trade. And here's another short signal up here. This was a 50-50 signal because as price corrected, it moved slightly above the 50 EMA. But as this red candle returned to the EMA and the RSI moved from overbought levels, we pulled the trigger with a 4-pip stop loss above this red candle. Immediately, we had a big red momentum candle below the EMA and after a period of consolidation, we reached our profit target. And also observe this invalid setup. Price was below the moving average. The RSI pulled back once again and rose above 80, but the ADX was below 30. Although in hindsight it was a great signal, we followed the rules and skipped the signal. In this example, a downtrend is obvious, as price is well below the 50 EMA, breaks new lows, and the moving average is sloping downward. The RSI pulls up past the 80 level, and price pulls into a former support turned potential resistance zone. Remember, even though we rely on indicators to find our signals, location is very important. Always try to take signals from levels where price found support or resistance. As the ADX was above 30, the setup also checked the volatility condition. The entry is below this red candle and the stop loss above it. Remember that you are scalping. You operate with narrow stop loss orders. Always close a part of your position when you reach a 1-to-1 risk-reward ratio. In this way, you don't risk ending up with nothing after having seen price move into profits. Here's an important filter to reduce false signals by over 70%. Pay attention. If the next candle after the signal candle, the one that pulls the RSI out of the overbought or oversold zone, doesn't break the signal candle, you skip the signal. Basically, you want immediate momentum after the signal. Look at this example. We had the potential short entry. Price below the 50 EMA. RSI rose above the 80 level, and the ADX was above 30. Then, we had this candle right here, the signal candle, which took the RSI out of overbought zone. But look at the next candle. It didn't break the low of the signal candle, so no trade. This filter is extremely important. An entry at the close of this red candle would have been a losing trade, but with this filter, you avoided the loss. Here's the filter in action, avoiding another loss. We had a price above the 50 EMA, the RSI moved below 20, and the ADX was above 30, a valid signal, but the trigger never came. The high of the signal green candle, which took the RSI above the 20 level, wasn't broken on the next candle. The next candle was a bearish one, so we ignored the setup and avoided the loss. Remember that we want immediate momentum. Please be disciplined and don't ignore this filter. It will save you many losing trades. The second signal was valid. The same setup, RSI below 20, ADX above 30, price above the 50 EMA, and the next candle after the signal one took out the high of the candle. A successful 1-to-1 risk-reward trade. Here are several tips to increase your win rate. Never trade when the price breaks the 50 EMA several times in a short period of time. You want a sloping moving average. When price moves above and below the moving average, it usually signals a consolidation period. Number 2. Trade from levels of support and resistance. Although we rely on indicators, location is very important. That's why most trading systems fail. That's because most of them don't take into account basic price action. This means that you need to take trades at or around certain price levels. Such location points are usually support and resistance, supply and demand, Fibonacci levels, or swing highs and lows. Take trades from these levels and you'll see consistent results. Number 3. Stick to trading signals which form during active market hours. If you're scalping Forex or main indices, these instruments are traded the most between the time the London trading session begins and when the US session ends. After that, the volume drops off and there are no big orders coming into the market to cause a significant move. And 4. Pay attention to spreads. Being a scalping setup, you want narrow spreads. The aim is to exploit sudden changes in the market liquidity for quick gains, but without low spreads, your profit will diminish. The key to a successful scalping strategy is to focus on liquid markets with narrow spreads, as this reduces trading costs. As always, if you got any value from this and learned something new, drop a like to help us with YouTube algorithm, and make sure you click the bell icon to stay in touch when new videos are released. Until next time.